Is Tether's USDT stablecoin depegging? A crypto exchange integrates ChatGPT, and how is Arbitrum doing 2 months after its airdrop? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. The price of Bitcoin has fallen below the $25,000 mark for the first time since March 17th, following a hawkish Fed announcement amid a turbulent week for the crypto industry. Within a span of 30 minutes on June 15th, the price of Bitcoin fell 4% from $25,867 to $24,819. Over the past week, Bitcoin had been holding around 26K as the market came to grips with the Securities and Exchange Commission's legal action against crypto exchange heavyweights Coinbase and Binance, as well as the increasing macroeconomic uncertainty around interest rate signals from the United States Federal Reserve. The sharp drop in price arrived roughly 3 hours after the Federal Reserve announced a pause on interest rate hikes, following a 15-month-long campaign of rate increases to combat surging inflation. While the market was almost unanimously expecting a rate pause, the Federal Open Market Committee statement hinted at further rate hikes in the future, which typically blunts investor excitement for risk assets like cryptocurrencies. According to eToro market analyst Josh Gilbert, Federal Reserve Chair Jerome Powell has made it quite clear that this is only a temporary pause, something that could spell further trouble for Bitcoin in the long term. Gilbert said much of the positivity we've seen from risk assets this year, including Bitcoin, is built on the expectation that inflation will fall and interest rates will peak and then begin to cut. Inflation is moving in the right direction, but the comments from Jerome Powell signify that rates could stay higher for longer, which could put Bitcoin on the back foot. Crypto exchange Binance announced the launch of a new subscription-based cloud mining product dedicated to Bitcoin mining. Starting today, users that are interested in Bitcoin mining but lack the equipment can subscribe to Binance's cloud mining services and purchase hash rates for the same. Hash rate is the computing power required for confirming and legitimizing Bitcoin transactions over the blockchain. Bitcoin is currently selling 1 terahash per second at $10.72, which is split between the hash rate and electricity costs at $1.17 and $9.55 respectively. A higher number of hash rate increases the probability of a higher income in terms of the Bitcoin earned through mining. Binance's Bitcoin mining subscription service will be active for 180 days, or roughly 6 months. For each terahash per second purchased, users will be able to earn a specific amount of Bitcoin during the timeline. As the product is launched on Binance's global website, the service is not available for crypto investors residing in the United States. DEXs like Uniswap have revolutionized the way cryptocurrency is traded in recent years by giving traders control over their own funds. The automated market maker model popularized by such DEXs, however, has been plagued by crazy high network fees, price slippage, front-running, low interoperability, and limited functionality. Because of this, many traders have opted to continue using advanced trading features and high interoperability offered by centralized exchanges, which also come at a lower cost to the user. However, while the trading experience may be better on centralized exchanges, it also may be riskier due to the possibility of hacks and data breaches. Our partners at Polkadex's Orderbook is built to eliminate these trade-offs. It combines the advantages of centralized and decentralized exchanges while tackling the issues of both. In short, it brings together the speed, functionality, interoperability, and overall look and feel of a centralized exchange with the security and individual custody of assets pioneered by existing DEXs. Polkadex's Orderbook is the first centralized leg exchange where you can hold your funds without worrying about the security breaches, and there's no centralized honeypot for hackers to go after. Only you can deposit and withdraw to and from your trading accounts. Trading crypto on Polkadex's Orderbook is as fast, if not faster, than trading on centralized exchanges. The Polkadex Orderbook is non-custodial, high-frequency crypto trading in real time with sub-millisecond latency. Polkadex is the leader in this field for being non-custodial with no slippage, no impermanent loss, more privacy, cheaper, and faster transactions. Polkadot has also just listed Moonbeam's GLMR token on their testnet, so the communities can test trading their parachain tokens and bring all of them to the mainnet. They want to be the go-to DEX for .sama assets, and they're well on their way. Check out Polkadex with the link in the description below. The Graph, a blockchain indexing protocol founded in 2018, is fully migrating to the Arbitrum network from Ethereum. The Graph's move to the popular Layer 2 was initiated by network participants in an attempt to lower gas fees, accelerate transactions, and increase the protocol's accessibility, according to a press release from the Graph Foundation. Edge and Node CEO Tegan Klein said users weighed the options among Layer 2 networks, and Arbitrum ultimately came out on top. The Graph users have continually searched for solutions to improve gas efficiencies and enhance other aspects of the network. Klein said in a statement, after careful consideration of all options on the market, the ecosystem selected Arbitrum as the Layer 2 scaling solution that will bring speed and affordability to protocol developers and network participants. This has been long in the making, with plans to move as far back as April 2022 via a governance proposal that suggested creating a set of contracts that would bridge GRT transactions to Arbitrum. Discussions about moving to a Layer 2 network because of extremely high gas prices date back to November 2022 on the Graph's forums. A June 2022 proposal was the first to present a deployment of the Graph on Arbitrum. Since then, the Graph has gradually taken more steps to exit the Ethereum network, including enabling indexing rewards on Arbitrum and deploying transfer tools, enabling users to move tokens to Arbitrum. Both proposals were passed unanimously. The statement from the Graph Foundation further explained that its users should start to receive transaction prompts today. Protocol users will be presented with an option to transition to Arbitrum across the Graph's suite of products. Protocol rewards will continue to gradually shift from Ethereum to Arbitrum, and over time will transition entirely to Arbitrum. Millions worth of Tether's USDT stablecoins appear to be selling off on popular Uniswap and Curve pools Thursday morning, sparking early signs of concern among traders. Lost its peg to the US currency and dropped as low as 0.9968. USDT balances on Curve's popular 3 pool, a stablecoin swapping pool made up of USDT, USDC, and DAI, rose to over 72% early on Thursday, suggesting traders had exchanged tens of millions of USDT in favor of stablecoins USDC and DAI. Curve's 3 pool now holds over $300 million of USDT and nearly $55 million each of DAI and USDC. The imbalance suggests an increased preference for DAI and USDC over Tether. Such sentiment was previously observed during Terra's implosion last May and the collapse of crypto exchange FTX in November. Tether CTO Paolo Ardonio suggested in a tweet that some traders could be looking to capitalize on the general sentiment in the broader crypto markets, which has dipped in the past 24 hours. He said markets are edgier these days, so it's easier for attackers to capitalize on the general sentiment. But at Tether, we're ready as always, let them come, we're ready to redeem any amount. TON, a Layer 1 blockchain developed by Telegram, has been operating as a community-led open-source project since 2022, and is known for its scalable architecture capable of processing millions of transactions per second. The TON network is designed to prioritize efficient workload distribution by spreading the workload across multiple chains, avoiding overloading any single chain. Scalability is a central focus of TON, allowing it to handle a large number of users simultaneously, potentially reaching millions or even billions of users. TON had launched a $25 million fund called the TON Acceleration Program in May 2023. This program aims to support projects building on the TON ecosystem by providing investments ranging from $50,000 to $250,000 per project. In April, TON secured a $250 million commitment for its ecosystem from major firms. And just recently, on June 14th, TON announced the addition of DWF Labs, a subsidiary of Digital Wave Finance, one of the top 5 trading entities by volume in the cryptocurrency industry. As part of the program, DWF Labs will contribute to tokenomics, market making, and liquidity provision within the TON ecosystem. We've made a great full video on TON, which you can find linked down below. Blockchain data and research platform Nansen recently wrote about how Arbitrum has done 2 months after its airdrop. Arbitrum's airdrop was on March 23, 2023, resulting in record high users and transactions. Interestingly, after the airdrop, the daily count of transactions and users has remained consistently higher compared to the chain's historical averages. Gas spending on Arbitrum has showed an upward trend, indicating increased utilization of the chain. The value of transactions, transfers, and traces in USD has followed a similar pattern. The number of new wallets initiating their first transaction on Arbitrum has reached its peak a day after the airdrop, gradually declining over the 2-month period, but still averaging higher compared to historical averages. Arbitrum has maintained a significant share of bridging volume from Ethereum, while smaller entities like Starkware and zkSync have gained notable market share in bridging activities from March to May. Crypto exchange Bybit is integrating a ChatGPT-based artificial intelligence tool in its trading platform to automate market data analysis. The new feature, called Tools GPT, is an AI chatbot that users can query for technical analysis, backtested price data, and other essential metrics. For example, Bybit traders will be able to analyze future price trends based on past data and technical indicators using the tool. Crypto companies, along with everyone else in tech, are trying to catch up with the AI trend by finding ways to implement artificial intelligence within their workflow. Ben Zhao, CEO of Bybit, said that by integrating ChatGPT into Bybit tools, we're able to give users more comprehensive information when making their decisions. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.